So I am recording. Remember, the lessons are recorded and uploaded onto the Snipe Vault. And yeah, let's go ahead and look at yesterday's buy first of all. Okay. Well, actually, should we look first at the buy or the sell? Well, let's look at how I identify the buy. So pretty much, okay, pretty much exactly the same as always. Exactly the same as always. If you have been with me for a while, you know perfectly what we're looking out for and how I develop my strategy on the chart. So let's start off by the confluences. What is my first confluence I'm looking out for? Let me know in the chat. Let's not waste time with this. You should all know this by heart. So first confluence, answer in the chat. Come on, let's do this fast. Okay, market structure, exactly, well done. Market structure. Second confluence, come on, without wasting time. Okay, exactly. I see all of you are learning. Well done. Fibonacci, third structure. Sorry, third confluence. S&D, some say liquidity, it's not liquidity. Supply and demand, well done. Supply and demand, fourth confluence. Liquidity, well done. Oops, I was typing on the liquidity. Okay, these are the four main confluences. Now, extra confluence number one. These ones, the order does not matter. Extra confluence number one, come on. Okay, well done. Point of control. Slash volume. Sixth confluence. Well, you have already written them all down, so yeah, I'm just going to balance. And seventh, session liquidity. Okay, remember, this, when I'm trading, this is what I'm looking out for, okay? This is what I need. With this four first confluences, I already have a trade. With these three extra confluences, I even trust more or less the setup, okay? Depending on these three confluences, I will trust more or less the setup. So without wasting any time, let's break down yesterday's setup. I did not look at any other time frame except for the 15-minute, and I knew from the day prior, okay, that price had respected this 1 hour demand zone, okay, which I also shared the zone. This was Friday, did not take it, but I shared it. Therefore, yeah, price is holding on to a demand zone. So we could see price break it down. Okay, we could see price break the demand zone down, but as now we will see market structure was bullish. I felt like price could hold that demand zone, okay, which is basically what we traded. So that's the 1 hour, price is holding onto the 1 hour demand zone. Now we just skip directly onto the 15-minute and just look for the confluences like always, very, very straightforward. So first of all, market structure. Here price, you can't see too clear, but price did a change. Oops. Price right here did a change of character. Okay, price right here did a change of character. On the 15-minute, you can't see it too clear, but if you go into the lower time frames, you can see it more clearly. Okay, price went up, down, okay, went up again, then down again. Okay, so the market structure. Okay, this was the market structure. Then price broke above this high, leaving us a change of character. Okay, change of character, and then price also gave a break of structure. Gave actually multiple breaks of structure all along the way, but if I'm not mistaken, I looked at this one, considered this one. So we have the market structure identified. Remember, price was holding onto a 1-hour demand zone, and then market structure. You know, I like this sequence of change of character followed by break of structure. So this was the market structure for yesterday, okay, for the buy setup. Then Fibonacci, we trace our Fib from the low to the high, okay? And we look for a supply and demand zone inside the Fib. In this case, I looked at the 5-minute time frame. Price gave this very nice demand zone right here, okay? Which is the closest one to the Fib. If you want to look inside, this one would also be totally valid, okay, which is the extreme demand zone also inside of the Fib. But yesterday I looked for this one, okay. Again, we want a demand zone which is inside of the Fib area or mostly inside of it, okay. We want a zone, we want to get a zone which is as much of inside of the demand zone as it can possibly be. Then we look for supply and demand zones. Okay, so it was this one, sorry. And then liquidity. So liquidity, price had swept. Let's go back onto the 15-minute. Price had swept all of this liquidity, all of this external liquidity, okay? Price had swept all of this external liquidity, and obviously it was creating liquidity inside. It was also creating internal liquidity, which pretty much, well, now you will see, was also the session liquidity. So next up, we are looking for the extra confluences. Remember, at this point, we have 4 of the 7 confluences. We already have a setup, okay? We already have a valid setup with the 4 of the 7 confluences. Now we just look for the extra confluences. Let's see if they lined up. So first of all, point of control. It did not line up. It was right up here. Then you will see for the sell, it did line up perfectly with the point of control. But for the buy did not line up. We did not have that confluence. Then imbalance on the 15-minute, we do not have an imbalance. On the 5-minute, we do not have an imbalance either. It was already mitigated, okay? All of the imbalances have been mitigated. So at the moment, we still have only 4 of the 7. And then session liquidity. Okay, session liquidity did line up. We had the Sydney and Tokyo low was right here above the zone. So, you know, looking for a setup once the liquidity has been absorbed is always valid. And pretty much we had 5 of the 7 confluences, totally valid setup. We had 5 of the 7 totally valid setup. So at this point, we know we have a trade here. If I'm not mistaken, the setup I shared was 76.2 was the entry price and 73.5 was the stop loss. Oops. It was more or less there. And then you can always target, remember, we take profits following risk to reward and also targeting zones and liquidity. Let's say this was our main target, the takeout of this liquidity. Okay, although price went over 300 pips, let's say this was our main target. So again, we have 5 of the 7 confluences. Let's play this out. okay? And this is how it played out perfectly, perfect rejection. And yeah, price then came to take out the liquidity. And then price kept on pumping to the upside. But yeah, this is a prime example of my setup, okay? Prime example of my strategy. I obviously did not take the buy because I took the sell here with bigger lot size than usual, okay? Well, more than bigger lot size, I had a 13 pip stop loss, which my risk was the same, okay? But as the stop loss was tight, I went in with bigger lot size, okay? I would still be risking 0.7%, but I started trimming profits. I think it was at 25 or 30 pips or whatever, which was already 1 to 2. So the percentage for me was great on the sell. I did not need to force anything else. So this was the buy setup. Is this clear, guys? Let me know. So is this clear? Let me know on the chat. Some are saying, oh my God, enorme. Clear, clear, crystal clear. Yes. Okay, nice. Okay, very, very straightforward. Like, remember, I'm always trading the same stuff over and over and over. I've been doing this for years and it's always working, okay? Obviously, any strategy will have up and downs, but trust me and trust these confluences because it's what really works. And if you were to even snipe it further, okay, you could have looked at the extreme demand zone, which was this one right here. This was the true sniper entry. This demand zone was totally inside of our fib area. So this would have been the best sniper entry. But again, these are the markets. You won't always be precise 100% of the times. Therefore, the setup I shared was perfectly fine as well. Is the point of interest is volume? Point of interest is one thing. Point of control is another one. Just answering a question. Is the people asking basic, KB says, is the people asking basic question, what's the snipe valve? This is what I also ask myself every time. Guys, if you want to make it, you need to study, okay? You need to work hard, watch everything shared on the vault, and so on, okay? This is not a easy game, okay? It's completely the opposite. Therefore, study all of the material I share with you. Okay, and then price just kept on pumping. If I was to take yesterday's sell and buy, I would have made a 10% yesterday. I made a 3.5%. I'm totally fine with it. But yeah, then just price kept on. And here, at this point, I'm 80% out of the trade. I'm 80% out of the trade and I'm leaving a runner. The runner would have played also very, very nicely. So yeah, this is the buy. Okay, this is the buy setup. And now let's look at the sell setup, which we took, which was from this high right here, okay? So let me copy this. Let me remove the drawings. And now let's have a look at the sell setup. Okay, again, following the same confluences, and also I consider the entry models I shared with all of you on the Snipe Vault. Okay, do you remember the entry model? So when price was here, remember, I was looking for a sell on this area. I was looking on a sell on this area. This is another entry model. So price creates a new high after taking the external liquidity. Gives a change of character right here. Okay, wait, sorry, I'm not doing this clear enough. So this is one of the entry models price creates. Here we go. Price creates a new high, taking out this external liquidity, change of character, consolidates. And then we can always look for a supply zone following the strategy on this area right here. Okay, this is one entry model of the ones I shared. So this is why I was first looking for a sell on this area, but then remember the second entry model, when price doesn't give this take out of this internal liquidity, we look for this next entry model, which is pretty much the same. Price takes out external liquidity, change of character, consolidate. And instead of taking out this internal liquidity to this zone, which would be this zone, price breaks, structure breaks this consolidation to the downside. Therefore, we are looking for a retest on the consolidation to trade from, okay? So this was the first entry model. Price did not take out this internal liquidity. Instead, it broke structure to the downside. So we account for this entry model. Okay, we account for this entry model. So we go into the 1 minute, oops. Or maybe even the 3 minute, hold on. Have a look at the 3 minute for this one. Where was this? Right here. So remember the other entry model I just shared. So price created the high, or price took out this external liquidity. Okay, took out the external liquidity, gave the change of character. So the external liquidity, change of character, price consolidates. And instead of taking out this internal liquidity and retesting the supply zone and then coming down, price did not do that, but it broke the consolidation to the downside. These are basically the entry models I shared the other day on the vault. These are essentially the entry models I shared on the vault. These are really the only patterns you need. No head and shoulders, none of that nonsense, but these entry models. So as the entry model says, we're looking for sales from this area, okay? Actually, the consolidation was from this high right there. So again, we are now looking for the confluences of the strategy. Market structure, as you can tell, takes out external liquidity, change of character, followed by break of structure, sequence I like, and price gives this consolidation. So following the entry model, we are looking for sell zones inside the consolidation area. So a market structure is bearish, Fibonacci. Oops. We trace the Fibonacci from the high of the consolidation to the low, which would give this. Then supply and demand, we look for a supply zone inside of the fib area. We could take this one, for example, although it has been tested, because we have the entry model and all of the other confluences, it's valid. So we'll be looking at this zone. Liquidity. Nice liquidity right below our supply zone. Then let's look for the extra confluences again. At this point, we already have a sell zone, but let's look for the extra confluences. So point of control lining up perfectly, okay? Well, inside of the zone, so we check that one. Imbalance, there was no imbalance. And session liquidity, there was no session liquidity. There wasn't session liquidity. Okay, there wasn't session liquidity. Although, well, actually, we did have session liquidity, sorry, because price had swept. Price had swept. Price had swept Asian high. Okay, price had swept Asian high, which means we do have session liquidity. Remember, looking for setups after session liquidity has been taken is also valid. So we had, again, 5 of the 7 confluences to trade from this zone. I finally ended up entering at 84.7. I actually looked at this supply zone right here. Stop loss was at 1986. And take profit, main take profit, okay, was that the demand zone was the buy setup, which was more or less here. I took 80% off at 94.7. So this was the sell trade. And let's have a look at how it played out. So price tested it, completed perfectly the entry model, okay, and it went straight to the buy setup, and then price just held on to the buy setup. Okay, remember here we took 80% off. So yeah, this was pretty much the sell and buy setup. Is it clear, guys? Do you have any question? Do you have any question? Some people are asking, what's the difference between break of structure and change of character? Guys, I've explained this at least 1,000 times. It's very, very important that you go over all of the lessons in the vault, okay? It's very, very important, as I can't be explaining the simple concepts over and over and over, because there's people that know it, absolutely know it, like Kai, for example, and like many other members. Therefore, it gets boring for them always explaining the same stuff. But I will explain once, okay? And anyone, if you have any question on any of these confluences, I have explained them perfectly on the vault multiple times. Therefore, go over all of the lessons and you will understand it. So essentially, change of character is the first break of structure. I will explain fast. So remember, the market moves uptrend, sideways, and downtrend, okay? And maybe again uptrend. Okay, this is more or less how the market moves. Whenever price, so sorry, this is a higher high, higher low, equal high, equal low, lower high, lower low, lower low, and higher high, and higher low. Okay, this is, for example, a market structure scenario. Okay, so pretty much the difference between break of structure and change of character is when price is breaking the last high to create a new high. This is what? Come on, let's see who can answer in the chat. What are these red lines? BOS, obviously, break of structure. Okay, because price is breaking the previous high to create a new high. It's breaking structure to the upside. In this case, price just ranges, equal highs and equal lows. The market is not trending. And then price suddenly breaks the higher low, or in this case, the equal low, to create a new lower low. What's this called right here? Price came from an uptrend and now it has broken structure to the downside. Change of character, obviously. And then again, price now breaks the low to create a new lower low. This one is called, but this is too easy. I know you all know, yeah, break of structure. But then price from the lower low breaks the last lower high. And what is this? Change of character, exactly. So pretty much, hope you understood it with this example. So break of structure is when price is trending, when it breaks the highs or the lows, okay, on an uptrend. When price creates a new higher high, breaks the last higher high to create a new one, that's a break of structure. And when price is trending to the upside, but then changes to the downside, for example, the first break of structure, okay, from the higher high to create a new lower low, that's a change of character, then break of structure again, then price, in this case, switches from downtrend to an uptrend, which means breaks the last lower high, creating a new higher high. It's the first break of structure of this new trend, so it's a change of character. Okay. So is it clear? Very, very straightforward. For the setups, you take the latest market structure. Yeah, I like to look at the last day's market structure mainly. Okay, sometimes I do zoom out, I do go into the larger timeframes, but mainly I just look at the latest market structure. Okay, for the past 1 day, 2 days. If it's a 5-minute setup, maybe the past few hours, and I determine that way. I always try to have a sense of the bigger picture, but it's not really compulsory to have it, okay? Did you see the same structure like yesterday's? What do you mean? Yesterday, you see, for example, price was going up, higher high, higher low, higher high, higher low, higher high, and then price breaks structure right there, giving birth to a new trend. So that's the change of character. Price creates a new higher high, breaks this low, break of structure, new higher high, breaks the low, sorry, new higher low, breaks the low to create a new lower low, another break of structure. So somebody's telling me to talk more about liquidity, guys. It's a bit boring for me to always talk about the same stuff, okay? To always have to explain the same stuff, which has been explained thousands of times on the vault, okay? On everything I share. The way I view liquidity, external liquidity is liquidity that happens outside of the setup. Internal liquidity is liquidity that happens inside of the setup, okay? For example, price takes out this liquidity, this is external. We are looking for sells, okay? Imagine here, considering we have all of the confluences to sell right there. Therefore, external liquidity and internal liquidity. Why does internal liquidity work? Or why does liquidity work? Because you have to understand the logic behind it, okay? Wait, let's make it more clear of an example. Okay, price in this case changes to a downtrend. People are looking for sells. What will happen is price creates trendline liquidity below the supply zone. So what will happen is that most of the traders or most of the retail or traders that don't consider liquidity will be looking to sell once price hits the liquidity. Okay, they will be looking to sell here and placing their stop losses right above maybe this high, okay? And if price breaks this trend line, they will be looking to buy, okay? Maybe placing their stop loss below this low or whatever, and targeting God knows what, okay? This would be the typical retail mindset. So here people are selling and they have plenty of buy orders, which are the stop losses, okay? So they have a sell order, But this zone in between the trend line and the supply zone, which our setup has given us, there's plenty of buy orders, which are the stop losses, okay? And once price breaks out, people will be buying and will be placing all of their stop losses, okay, along this area, which means there's plenty of buy areas, sell orders, along this zone, okay? Do you understand that? So people are selling here, okay? Stop loss is a buy order, okay? Which means there's plenty of buy orders to take here, and people are buying and selling and stop losses, which are sell orders, are here, okay? So what happens is everyone is selling below this area. So what do liquidity traders do? We hunt all of this sell liquidity, okay, to buy the market, okay? We can buy because there's sell orders, because people are selling along this area. They're sell, 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 sell. So we are buying, okay? Remember, price is always fetching liquidity. So price can only go up, because if everyone is selling, the demand and supply needs to compensate. So people know this, and they will buy all of these sell orders. So buy, 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 buy. That's why price takes you out on your support and resistance or on your trend line. Are buying, buying, buying all of the sell orders. Then what happens? Once price comes to the zone, okay, all of the stop losses have been mutilated. People start buying, okay? This means there's buy orders available. So what do liquidity traders do? We absorb all of these buy orders, okay? And then just take the price down, okay? It's just a thing of supply and demand pretty much, okay? So there's a trend line. Everyone is selling on the trend line. Price can pretty much only go up because price is looking for liquidity. If there's sell orders, price will absorb them, okay? So price goes up, 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 taking all of the sell orders, and pretty much on the supply zone, the same happens. So people switch to buys, they start buying, 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 and liquidity traders start absorbing all of those buy orders by selling, okay? So if you look at this, retail traders hit two stop losses, stop loss on the sell, and stop loss on the buy, okay? And supply and demand and liquidity traders only take one sniper entry from the zone. Once all of this mess has happened, all of the liquidity sweep, they will only sell from here, okay? So is this clear? Is this concept clear? It might sound a bit confusing, but trust me, you will get used to it. You will get used to understanding it. It's a very, very important concept, okay? Thank you so much. Well understood. You're welcome. Crystal clear. Yeah. So pretty much this is the concept of liquidity. As supply and demand traders, we are looking for support and resistance or inducement or trend line above or below our supply and demand areas. Okay. That's how we identify the liquidity. Okay. So let me stop recording. Well, do you have any question, guys? Let me know if anyone has any question. But please don't do me questions that have been answered thousands of times in the vault, and ask me more deep questions. Yes, I have. Go ahead, Sagar, and ask. Give me 1 second, guys, and I will be answering your questions. Hold on. Can you do a live analysis? Yeah, we will do a live analysis now. When will this video be posted? As soon as I end the call, I will process it and upload it onto the vault. Just now you explained this diagram. Just now you explained this diagram, but this does not match our second entry model. Remember which one? This one right here. This is the third entry model. This is the third entry model. The trend reversal too. This is the trend reversal too. So price takes out liquidity, change of character, consolidates. And instead of taking out the internal liquidity, it breaks structure to the downside. Therefore, we are looking for supply zones around this area. So somebody's asking, is this how banks trade? Banks do not trade like this, okay? Obviously, they do not trade by looking at these confluences, okay? Most of the times it's algorithmic trading. It's nothing to do with what I'm sharing, but so yes and no, okay? By looking at these confluences, by looking at these entry models, we identify more or less the footprint that banks are leaving, okay, where banks are placing their orders, how banks are moving price action for us to trade. So if you look, here we took a trade following the entry model plus the confluences, and we literally took the trade the banks took, okay? This move right here is purely institutional move, okay? So by following these confluences, you can identify where banks are trading from, okay? Although they are not following these confluences, but thanks to them, we can identify the market footprint, okay? Identify where banks are placing their orders, how price is being moved, so we can trade. We trade with them, although they do not trade using these confluences. We aim to always trade with the banks. I have a question about you short position above that. There's a supply zone. And if we want analyzing by myself, I would have sold from there. Why wasn't that a valid supply zone? So, Sulo, this is a good question, although I already answered it. Remember the entry models, okay? When price was here, remember yesterday, I also shared this sell zone right up here, okay? I also shared when price was consolidating, remember this is the first entry model, the first trend reversal entry model. The valid sell zone at this moment is this one, it's selling from here, okay? This is the valid sell zone, but what happened? If you look at the entry models, price broke this consolidation to the downside. So following the entry models, we ditch the sell zone and we look for a sell zone inside of the supply area, okay? Look for a sell zone inside of the supply area. Sorry, inside of the consolidation. This is basically the entry models. Alex, what type of confirmation do you look for when price action takes out liquidity and reaches your supply or demand? So most of the times, if I have these confluences, okay, and I like the setup, I am trading aggressive. I am placing a pending order and I am waiting for it to get executed. If not, we are looking for a setup inside of a setup, okay? So essentially, we're looking for these confluences on the bigger picture. Let's see if I can find an example. For example, let's go right here onto the 30-minute time frame, okay? So you can see price is rejecting this demand zone, okay? Let's say we had, sorry, let me again copy this and remove everything. So, hold on. So let me show you right now. Okay, so let's say we have, this is how you can look for setups inside setups. Let's say we have this setup right here, okay, which gives us this demand zone. But we're like, this demand zone has already been tested. I'm afraid price will break it to the downside, okay? Therefore, remember, here we have all of the confluences as well, but price has already tested the demand zone. So maybe we don't trust it enough. So we are like, okay, let's wait for lower time frame confirmation. So we have this setup on the 30-minute time frame. We wait for price to come to the zone. Oops, sorry, I went too fast. We wait for price to come to the zone, okay? And then we can swap maybe onto the 3-minute time frame. And again, inside of the zone, look for the same confluences. So let's see. I'm not sure if price gave it. I'm not sure if I got the example. No, I was looking for this example. Sorry. This was the good example. Sorry. So let's see if I can make it clear now. Price came to this demand zone. Maybe you don't trust it enough because you're like, price could take out all of this liquidity below. Price could take out all of this liquidity below. Therefore, you don't trust it enough. So you wait for lower time frame confirmations, which essentially you have a buy setup following these confluences. Then you go into the lower time frames, let's say the 3-minute again, and you look for exactly the same confluences on the zone, a setup inside the setup. So market structure, price breaks the high, fib, we look for our fib. From there to there, we look for our demand zone inside the fib area, which is this one right here. Let me delete everything else. Remember, we are inside of a bigger time frame demand zone. Supply and demand, that's it. Liquidity, we have the takeout of this external liquidity, and let's see if price created an internal liquidity. Well, actually, price did create internal liquidity right here. So we could be looking to trade from somewhere around this area. And let's see. But in this case, we should, price came to test perfectly the fib area. Okay, so this is essentially a setup inside of a setup. It's just, again, looking at the same confluences that we looked on the 30-minute time frame. Okay, the same confluences we look to identify this 30-minute demand zone. We look for them on, let's say, the 3-minute time frame. Okay, any other lower time frame. And then it just plays out. Guys, we are not here to talk about running trades or if you are selling, buying, or whatever. We are here with another purpose. So keep your focus on the topic. So is this clear? Yes, this recording will be uploaded and stored in the vault. Then I also want to show you guys, well, let me stop the recording now.